Market Day Report, first day of a new month. So glad you're with us, but more importantly, glad that you're allowing us to be a part of your day. All right, corn market is up and trading, and we've been in positive territory, at least on the new crop, where December trades $4.47 a bushel. It's up 3/4 of a penny. Look at that tight trade range, though, about 4 1/4 cents. This is a market that's been up 3.7% year to date. And again, new crop moving higher after a weekly export sales number of over 1 million metric tons sold in the previous week. Only 428,000 metric tons of soybeans sold, and that's really not enough to fire up those who want to trade in that market. And the November contract is kind of stuck, 10.16 1/4. It's down 2 pennies, and the new crop contract for soybeans has settled lower now for 4 consecutive sessions. While we're here, let's hit on soy meal and soy oil. And the mill contracts are lower across the board, and soy oil is higher. All right, wheat market, Chicago. July is new crop 536, 5 1/4 cents higher. Kansas City, or hard red winter, nickel higher, 534 1/2. Spring wheat, Minneapolis. The D's contract at 629 1/2. It's up 2 1/2 and just a penny off the day's high. And the cotton market remains in the red. December 67.50. It's off 29. Let's roll in oats here. Oats are lower across the board, and oats coming into the session yesterday had been higher 6 consecutive sessions. However, turned lower yesterday, and we continued the losses. And a market that's been down, was down for 6 consecutive sessions, but turned higher yesterday. Building on that a little bit, the rice market in higher territory as well. Okay. Ted Seifried's with Zaner Ag Hedge. Ted, we've run through the numbers here. What are your thoughts?
Yeah, Tony, we started off with a decent amount of strength, optimism about, the export sales. It was a pretty decent sales number for corn, also for soybeans. We're all waiting for the export sales to fall off a cliff, especially for soybeans because of tariffs with China. But it hasn't quite happened just yet. So that was a little bit friendly. But as the morning has gone on, we've really kind of faded off of that. You had the big down day for corn on Tuesday. We've tried to bounce back yesterday with some success. We ran right into our 200-day moving average, so right to where we, the back and fill type technical action, and then now we've kind of faded off of that. So this is not a good look at the moment for corn. And then, soybeans too. It started with some strength after, trying to do it yesterday. We've given it back and now trading a little bit lower. So, I think the market's just looking at the idea of, planting for the most part looking pretty smooth. Yes, we have some rains come in and out, but, it doesn't look like we have extended delays for a lot of areas. And we're already ahead of pace. So, yeah, we just seem to be under a little pressure right now.
Okay. Hey, Ted, let's take a quick break. We'll come back. We've got livestock futures to talk about and some outside markets as well. Market Day Report continues in a moment. Cash cattle trade 218 in the south, and in the north 222. And how about this? We already had seen the numbers on dressed. 350 for this week. Don't know if we're finished, but could be. Live cattle futures still holding strong on the front 2 months. And I say strong, 209.10, and it's up 70. Now a dime higher on the August, while the deferreds are selling off a bit. What about the feeder market? Well, feeders, only the May contract in positive territory at 292.82. That's up 1/4. Deferreds are in the red. Hog market. Well, what are we watching? Well, turning red here as well. June, 97.97, down 30. Help us break it down. Zaner Ag Hedges, Ted Seifried. What do you see?
Well, Tony, watch the cattle complex closely right now. You had the outside reversal down day yesterday in the June live cattle. That is what is technically called the key reversal. I'm not in the camp that says a key reversal means an ultimate high in the market. to me, that's a big red flag that a market could be getting to an extreme, in this case, a high. In the meantime, look at the August feeder cattle. You had a down day yesterday, but you have an outside reversal down day happening today. If we close here or lower, Tony, that's a really big technical sign on a chart that, yeah, this is a potential topping area, right? And we've been talking about it for quite some time for the cattle market. It just hasn't happened. Cash has been strong. Consumer demand has been really strong, despite all of the talk of recession and concern about the global economy because of tariffs and everything like that. But now you are starting to see some of these technical warning signs happening here for the cattle complex. So I think this is a time to be watching that cattle complex very closely as producers. I think you want to be looking at hedging downside potential or getting some downside protection unless there's a major turnaround between now and the end of the day. So keep a strong eye on that. Hogs are just kind of treading water. I don't think there's a tremendous amount of downside there for hogs just yet. But if there is pressure in the cattle complex, that might spill over to the hogs as well.